welcome to our YouTube channel. Alright, so in this video I will be as brief as possible because it's something basic and something very important that every trader needs to know. Okay, so just like the title of this video, how to mark out, how to identify a trend. Okay, so what inspired this video is actually because of the newbies, those who are new to forex trading, and maybe you are new to the system and you don't know what a trend is all about. So in the forex market we have different types of trend. We have the uptrend, we have the downtrend, and we have the sideways trend, which can be referred to as consolidation. So let me spot out an area which serve as a consolidation zone for you. So if you look at this very point here, this axis right about here where I just mark out, this is what we refer to as a consolidation zone. Okay, so this zone here that I have in my rectangle box, yeah, this is a rectangle too. So where I have it in this box is what we refer to as, or we call, a sideways price movement, which means it is not forming higher highs, higher low. It is not forming higher low, lower high. It is just moving in a single. Sorry guys, I got distracted with something. So I was explaining a consolidation zone or a sideways price movement. Now this simply means that price is not making higher highs or higher low. It is just moving within a zone or within a region or point. You could see it that price was just it comes, let me use this tool so that I can be able to explain properly. So price came right about here from this point here. It came down all the way into this very point. No, it came down here, and what happened next was that price came here, and then it went all the way down to this point, and then it went all the way up, and it came down again to the support of this point, and then it went all the way to the upside of this resistance, and it came all the way down to the support of the range. And then you could see it, although it didn't reach to this very point, but it closed somewhere right about here, and then it came down to this point. And what happened next was that eventually price shoots to the upside and broke above it, and it closed at the above this resistance. Can you see it? It closed above this resistance. This was where price got to, and then it closed above this range. And what happened was that we had a very little pullback to this very point right here. It pulled back to this point, and then it went all the way to this upside. And what happened next was that price came all the way down. Okay, so this is a typical example of how a range market is, or how a ranging market looks like. Okay, the next thing we are going to be looking out for, or we're going to look into, is a downtrend. So I have a very simple or a clearer example of it right here. So this is how a downtrend looks like. So price, after it broke this range, it came all the way to this very point here. And like I said, before I continue, I would love to say something. Now, a trending market, a downtrend trending market, always forms a higher low, lower low. It forms a lower high, lower low, lower high, lower low, lower high, lower low. Okay, so this is how it looks like. Now price from this very point here, you can't really see, but it started right about here, and it got to this point. So it gave us something of this kind to this point, from this low to this very high, and then it came down to this very point, to this low, and then it went all the way back to this upside, lower high, and then it came all the way and gave us lower low. Okay, now this low became lower than the previous low. The previous low was this low right here. Okay, the low right here was the previous low. So this current low was lower than the previous low. This was where the price closed. Okay, and the next one was lower high, which was which is this very point here where price got to. It got to this very point here, and then it came all the way to this very point, and it gave us a lower low. Okay, now however, it looks more like equal low. Okay, it happens, it gave us something more of like equal low, but price went and gave us lower high, and then it came all the way down and broke the previous low and gave us a lower low. Can you see it? The lower low broke the previous low, which was this, which this is what this is where the previous low was or is, and price broke it and it gave us this point here, and it came, okay, let me draw it down to this very point here, and then it gave us this is lower high, and its price closed here, right? So this is what we have, a typical example of how a trending market looks like. And like I usually say, that the money is in the trend. If you trade the trend, you will always get it right. Like your strategy will definitely be on point. That's if your strategy is basically trending type, you're definitely going to be successful most of the time in your trading when you are trading a trending market. But if your strategy is range dependent, now this is, like I said, this is a ranging market. This is a ranging market. If your strategy is ranging dependent, so it simply means that you will look for a ranging pair. By the way, this is XAU USD, this is gold. If your strategy is a ranging type, you're likely going to be looking for setup that are ranging based, or pairs that range most of the time. That is what you should be looking out for. But if your strategy is trending based, like your strategy respects trend most of the time, you need to be looking out for strategies or setups that are trending based. For example, this is a typical example of a trending market. Okay, so this is a typical example of a trending market. So this is a good example of a trending market. Okay, so this is a range, this is a range, and this is a downtrend market. Okay, a downtrend scenario. Now let's move on and check if we can have an uptrend market. I think we can actually see one right here. This is, let me box it so that we can make do with this very one. So this is an example of a trending market, uptrend. Now what do we have here? I think we could see a good number of it, but let's just take it right from this very point. So an uptrend market is, or an uptrend price movement, it simply means price forming a higher high, higher low, higher high, higher low. Okay, so how price move in an uptrend market, it forms a higher high, higher low. Now there is what we call sorry guys, there's what we call an impulsive leg, and there's what we call correctional leg. Okay, now impulsive leg or impulsive price movement, it is the major trend or the major movement that you are expected to catch as a trend trader. What you should look out for whenever you are trading trend is that you shouldn't trade the impulsive legs or the impulsive price movement. You shouldn't trade the correctional legs or the correctional price movement. You should always watch out for or be anticipating the impulsive price movement. Now, what do I mean by that? This is a typical example of an impulsive price movement. Now, starting from here, from this very point, you could see its price all the way from this point. It came down here, and then now this is a correctional leg. Okay, so this is what we call an impulsive leg. Can you see it longer than the correction, right? It got to this point, it gave the impulsive leg, got to this point, it broke the previous lower high. Okay, it broke the previous higher low. In uptrend, we have higher highs and higher lows. So it broke the previous higher low, and it got to this very point with an impulsive price movement. It got here, and we have a correction. So this is a correctional leg. It got to this point, and then this is an impulsive price movement to this point here. So it got to this point, it broke the previous higher low. This is the previous higher low, and what we saw next was a correction. Price corrected itself to this very point, and then it went all the way to the upside. Okay, it went all the way to the upside. So it got to this very point here, price got to this very point here, and then what we saw next was a correction to this very point. It corrected to this very point, and then it moved in an impulsive price movement. However, it's more of like a double top we have right here, but that be the case, we saw a correction, a price corrected itself without breaking the previous higher low. Okay, price didn't violate the previous higher low, it respected it, and then it moved all the way to the upside. Can you see it? This is a which one should I make use of? Yeah, it's moved all the way to this very point, and we had a very good impulsive price movement, and we had a correction. This is a correction, and another impulsive price movement which broke the previous higher high. Okay, so this is how price move. Price will always move in an impulsive way by breaking previous higher highs or lower low. Okay, that's in a downtrend, it will break the previous lower low so that we can have a very good impulsive price movement. Okay, so that was what happened, and then price came all the way to this point, and that was how we got ourselves, or the trade got into a range. Can you see? So this was what happened exactly. So I believe this video has been able to explain with clarity what we mean by an uptrend, a sideways price movement, and a downtrend. Okay, so if you love this video, please give it a thumbs up and drop a comment. Let's know what you think about this video, and if you have a question, you can do well, drop your comments, and we will respond to you adequately. Thank you so much for watching, and don't forget to click on the subscription icon right there and turn on the notification bell for more videos updates. Love you guys. Peace out.